Hi traders, this is Brad with the Asian preview. All right, now just coming back into the markets as they reconnect from the weekend. There's not a lot to get excited about at the moment. There's been no major releases fundamentally anyway. So, and there's been all the talk is just about Syria. The US is loving the new place as the mediator as opposed to the aggressor. Now, equities just reconnecting down 0.2, zero point 0.1 for the S&P. Not much going on. As you can see, pretty much sideways activity here in the dollar index, slight upward bias. But that, I'd say it's more sideways because once you come back over to the currencies, now momentum, has dissipated from last Friday. Now we are back into the normal stream of things. And you can see there's a fair bit of dollar weakness out here, with the Antipodeans. Okay, you got the Aussie back up here towards 72.50. Kiwi bounced pretty hard from 65.20 up towards 66. The dollar against the yen rallied super aggressively up to 123 sort of 40. And then you've got euro still dribbling off. Sterling made a good little bounce in line with Aussie and Kiwi. And, well, I guess you could say dollar CAD came off, but it's still within that bigger range. And oil still a bit of a headline there with that one. So, bit of a mixed bag, okay? As I've been saying the last couple of weeks or month, euro, definite bias to the downside. These other currencies bouncing, though, may give us an opportunity if they still continue to bounce. It's going to be a dollar sell-off, and we may see an alternative bounce in euro. So keep an eye on that. That's as we move forward into that European session later today. Now, coming back into the local session here, we've got the RBA interest rate announcement today, so keep an eye on that. There's some earlier numbers, some building approvals numbers, but it really comes down to the cash rate. There is no expected change in the rate. The talk and all the bias from the central bank is definitely one of sitting put at this stage. They've made it very clear over the last couple of weeks. What we will have is probably better trading opportunities later in the week with GDP figures and retail sales figures giving us the next real leg into the Aussie dollar. So all you should be finding at the moment is it's a bit annoying, these sort of toing and froing range-bound markets. I tell you what, there's always a slight little break to the downside. There's one to the top side. And if you're on the wrong side of it, you end up with nursing a sore head. So just keep an eye on things. We're looking for that trade that does stand out a lot more than what these ones currently are. And at the moment, the Aussie, we've got resistance here at 72.60 and support down here at 71.80. So, if anything, the top side, potentially looking for a sell. It's going to come down to the RBA statement. All right, no change in rates. It always comes to the statement, which is forward projection of what their intentions are. Now, don't forget, this is the December meeting. They do not meet in January, so they may try and put something in there to ruffle the market. Who knows? But they do have 2 months to sort of factor in here, which is a little bit left field. Now, coming over to the flightless bird, it has broken up through 65.70 here. And just sort of continued slightly towards the top side. And that's the Kiwi. I mean, I tell you what, the Kiwi can be a nasty bit of gear. Yeah, as you can see, Kiwi yen also, let's get that pen out, also breaking to the top side. That move in dollar yen has taken a lot of the yen crosses with it, and I'll come to that now. Just have a look at the yen move first. We're talking yesterday about potentially looking for a buy on dips back towards this cloud area. I don't know if, it was probably did get close enough, I was just trying to think where that level was. It probably in the low 60s if I was going off the trend line here as well. So may have just missed that. And you see that really strong move, 60, 70 point move to the top side. It is mid-range, a tough trade, but this does a lot of things for the yen crosses. Okay, if I just flick it over. All right, so it's a little bit unexpected too for sort of a Monday start to the week. Okay, the Aussie, we just had the trend line there as well. It already sort of broken up through the cloud. That's a pretty big move. I was going to say a hell of a move. Like 120, 30 points. And same with the Kiwi yen. These are big moves. Okay, big shakedown moves. I can't see it as an interest rate play at this point, but As you can see, a lot of the crosses have moved aggressively. Euro yen through that cloud. This may take out a few weeks stop losses. I'm waiting to see some more downward momentum here on euro yen. With the euro back towards that, if I just come back over here, back to euro, back towards this resistance line. This is building up to quite a nice trade now. Now, once it gets close to these trend lines, this is the time to concentrate and work out, I'm definitely looking to get short euro, but the way this thing has been stalling down here, we need something to give it an extra push. Otherwise, what you'll see is the weekly clean out where it sort of rallies, takes out the stop losses, where it stops, maybe these highs. You look for it to get short up on these levels. So now we're coming to Asia where euro really is the focus. We need to pay a bit more attention to the yen crosses, particularly euro yen, and see where that euro, if it is going to break through that level, okay, which comes in around 105.90 or not. All right, now one other sort of $1 there, the offshore one, down. It's just come off a bit, and this is on the back of, I'd say it's on the back of the IMF giving the yuan or the renminbi joining the IMF basket. Okay, so what this allows them to do is actually get loans off the IMF. Now, this is a purely symbolic gesture. It has no real implications as far as financial markets goes. They don't really join until October 2016. Okay, as it goes through here, you'll read the report. The symbolic thing is this basket of currencies hasn't changed for 35 years. All right, and one of the interesting parts of it is though, this is the breakdown of the currencies. Almost 42% dollar, 37.4 euro, 11.3 sterling, 9.4% yen. Okay, so what they are expecting for the new ones, no surprise, is not supposed to be a change in the US dollar proportion. The euro, sterling, and yen will be giving up some of their percentage in there, and that's where it goes. So anyway, the currency will have a 10.92% share, and can receive as part of IMF loans. All right, that's something they're obviously preparing for. They must be bringing that in. Get ready to open the purse strings because China is in trouble. All right, but that's, as I said, there's no real financial market ramifications there. It is purely symbolic. It's a bit of a confidence booster to the Chinese officials and the currency for that matter. And that's about it. That's probably why the dollar yuan has come off. The dollar has come off against the yuan. All right, so if anything, it's already sort of breaking down. I just had to move that trend line. As you can see, the trend line was here. It's a little bit convoluted, and then we have this new level here. Well, I think what they're hoping that means, the international community bringing them in, would hopefully mean that they stop messing about with their currency so much, and they start to play the international game. I'd say that's what it's all about. All right, and that's pretty much it. So key announcements today: Aussie RBA at 2:30. You want to get onto that and keep a very close eye on the Aussie dollar and the crosses for that matter. This should be a pretty good opportunity. Okay, we'll catch you later on. Cheerio.